The Indian market joins in the global equity rally. The Nifty opens higher, sustains above 25,000 as autos and banks surge. FMCG stocks, however, see some profit booking.
Infosys announces its largest ever buyback worth 18,000 crore rupees, where it will buy 10 crore equity shares at a price of around 1,800 rupees per share. The stock is trading higher, though it's off the morning highs.
Lodha Developers trades in positive terrain, though off highs again after signing a 30,000 crore MOU with the Maharashtra government to set up a green data center park in Palava.
Lupin trades higher after Investec upgrades the stock to buy and raises the target price to 2,200 from 1,100 rupees earlier. Brokerages cite reasonable valuations and the upcoming GLP-1 drug opportunity as the key triggers.
Shares of JBM Auto zoom after subsidiary GBM Eco Life Mobility secures funding worth $100 million from the International Finance Corporation to purchase and operate electric buses.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. Manglam, there's green on top of the screen. It's a good times. It's a good start to the Friday morning.
Good start to the Friday morning, Nigel. The Nifty Bank is the only one which is a slight underperformer, but it's at a very crucial juncture. It is at the 20-day moving average. So if it sustains above this level, the next technical important levels come only 1,000 points from here on. So let's see whether that happens or not. If that does happen, that will be a gift to the bulls. But speaking about gifts, Nigel, wish you a very, very happy birthday. Well, it's actually been a present to be working together and creating the kind of content that we've been doing with, the viewers. So we're on big camera, so let's go for that hug. Wish you a very happy birthday.
Thank you so much, Manglam. It's been a pleasure, working with you over the last 10 years or so. We have had our share of laughs, few tears, and it's great. The focus of the show has been to give our viewers the best. And I think we're doing a good job, but I think we can do even better. So thank you to all the viewers. Thank you, Manglam. Great friend, great support. And there are some office colleagues that you take all through your life, and you're one of them. So thank you so much.
Thank you so much, Nigel. Very kind words out there, and may this be the start of good times. And obviously, there is always room to improve. Speaking about room to improve and speaking about, just the party continuing, we do have Manas Jaiswal joining in. Manas, does the market have room to improve from here on? And we've been pushing you for a jig every once in a while. Do you want to do that today?
Good morning, Manglam. So, see, if you're talking about the trend, I think Nifty is sustaining comfortably above 25,000 mark, which is a very positive sign for Nifty. I believe that soon Nifty can test 25,250. But looking at the pattern on the daily chart, that is an inverse head and shoulder pattern. If it breaks the neckline, which is placed near 25,100, then I think you can set a bigger target of around 25,600. So I am still positive on Nifty, and I believe that till Nifty is trading above 20-day moving average, which is placed near 24,800, any decline would be a great buying opportunity, and you can set a bigger target of around 25,600 on Nifty. However, on Bank Nifty, I think in Bank Nifty one should wait, because Bank Nifty has resistance in the range of 54,700 to 54,800. But if it breaks 54,800, then you can set the bigger target of around 56,000 on Bank Nifty. So you can hold long position in Bank Nifty, keep your stop loss below 54,300. But I think a fresh long position should be taken only on a breakout above 54,800.
Okay. All right. Got that, Manas. What about individual stocks? What are you looking at?
Good morning, Nigel. So individual stocks, I think one can definitely look at defense counters, especially Mazagon Dock, where stock has broken its 50-day and 100-day moving average with great volume. So here one can take a long position. Stop loss should be around 2840, and the target would be around 3050 on Mazagon Dock. Second is a buy call on Hindzink, where stock has regained its 200-day moving average, and it has given a confirmation of higher tops and higher bottoms. So in Hindustan Zinc, one can take a long position. Stop loss should be around 444. Target would be around 465.
All right. We're seeing some traction build back in rail and defense names. Do you think they're good for more from here on? BEL, for instance, is at the high point of the morning. We saw RailTel win some orders over the last few trading sessions. That stock's been doing well as well. So just wanted your thoughts on a couple of these names.
So in defense, see, I have recommended Mazagon Dock, but I am still bullish on BL. Even HAL is looking very strong. If second stock you want to buy in defense, I think one can definitely look at HAL. Keep your stop loss below 46.20 and target would be around 4800 to 48.50 in HAL. And in railway counters, I think one can definitely look at RailTel because stock has given a confirmation of higher tops and higher bottoms. It has regained its 200-day moving average. So one can take a long position here also. Stop loss should be around 360. That is a positional trade. And here the target would be around 398.
All right. What about the big boy Reliance Industries? How is that looking at the charts?
See, I think the positive point is stock is comfortably trading above 200-day moving average for last, I think, 3-4 trading sessions. Now, since stock has regained 20-day moving average today, I think one can take a trade for short term, take a long position in Reliance Industries. Stop loss should be around 1375, and here the target would be around 1420.
Right, we were looking at a couple of these auto names. JBM Auto, for instance, is higher because of the fundraise in Eco Life. Atul Auto is up around 12% right now, and volumes picking up on that one as well. And, just before we let you go, Manas, do you have a view on any of these auto names? They've been on a fresh rev-up mode because they saw some profit taking yesterday, maybe a pause for breath in the previous trading session. Do you think this is a start of something fresh once again after a pause for breath?
I think, look at JBM Auto because here stock has given a breakout of inverse head and shoulder pattern, and now the next target would be in JBM Auto is almost 740, 750. So positionally, I think one can take a long position even at current levels, keep the stop loss below 659. And in front line, I think most of the auto counters are looking very strong on the charts. You can buy Eicher Motors, you can buy Maruti, you can buy Hero Motocorp. But in front line, if you want to buy one stock, then I think definitely one can look at Eicher Motors. Stop loss should be around 67.50, and here the target would be around 7,200. Positionally, you can take a long position in Eicher Motors.
Appreciate you joining in, Manas. Thanks a lot for giving us your view on markets as well as on individual stocks. But it's that time of the show where we move to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda Dey of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu, over to you.
We are talking about IRCTC that has underperformed the benchmark in the past year. IRCTC has a monopoly in railway, internet ticketing, catering and packaged drinking water. It also offers a variety of tourism packages. However, most of the businesses being matured in nature offers modest organic growth prospects. In fact, the Q1 earnings was quite lackluster with revenue growth driven by internet ticketing and tourism, whereas margin got support from all the segments except for catering. Given that the penetration of internet ticketing is high at 87%, this is unlikely to go up further. The medium-term earnings driver could be addition of Vande Bharat and other trains with a dedicated freight corridor, freeing up capacity for passenger train addition. Given that the railway travel and budget tourism are less vulnerable to economic slowdown and external challenges, we see little risk to IRCTC's modest growth.
All right. Thanks a lot for that, Madhu. Well, on that note, though, we'll slip into a short break. As we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and all the updates from the financial world. All of this at your fingertips. Download the CNBC-TV18 app from the Apple Store, the Google Play Store, or simply scan this QR code that's up for you on the screen.
Welcome back. A couple of stocks doing extremely well. We had Manas just speak about Hindustan Aeronautics. Look at that. That's moved to the high point of trade. Mazgaon Dock was one of these recommendations. That's doing well already. Bharat Dynamics is the other one, which too has moved higher. Though we're seeing a serious amount of profit booking in some of these FMCG names. So Berger Paints at the low point of trade. We have Patanjali Foods as well now, an F&O stock currently at the low point of trade as well. But it's just profit booking in the consumer space. Otherwise, the market's in fine fettle. And JBM Auto is one of those stocks which has been surging. A subsidiary secured funding of $100 million from the International Finance Corporation. Sudarshan joined in. Sudarshan.
So it's a huge boost for the company as its arm, and that is electric mobility arm JBM Eco Life, has secured $100 million funding from International Financial Corporation, that is the member of World Bank. And now company is saying that it's going to implement this fund to buy and operationalize electric buses, and majorly it would be done in 3 states. Those are Assam, Maharashtra and Gujarat. Remember, company had backed the tender under PM e-bus scheme for these buses. Already it has almost order book of more than 11,000 buses that would be deployed over the next few years. And it's very important considering government has a target to implement or increase the penetration of electric bus to almost 40% by FY30. And over the last few months, JB Moto has been moving higher, and today also it's up currently 9%.
Okay. Thanks a lot for that, Sud. But the other one that's rallying in trade is Lupin. Investec, they have upgraded the stock to a buy rating. They've raised their target price. Vinny joins us to run us through the fine print. Vinny.
Hi Nigel, good morning. So yes, Investec has upgraded the stock to a buy. Previous hold rating, target price now is at 2,265 rupees. Previous target price was 2,100 rupees for Lupin. Why have they upgraded the stock? What are the positives that come in here? They believe that the company is quite well placed to grab and take the opportunity that will come in from GLP-1. And for India specifically, this is going to start next year for semaglutide. Lupin already has a very good base, one of the key players when you talk about anti-diabetes as well as cardiac arrest side of drugs and therapies. And that is why they'll have an upper hand that comes in terms of grabbing this opportunity for semaglutide. Other than that, the company has received a lot of recent approvals for inhalation, injectables, complex injectables. That is also a positive that will start playing out for the company. And they expect that, for the company, they could see some $20 million to $30 million annual sales for these injectables and inhalation products that they do have. Other than that, the company is saying the valuation right now is more reasonable, is what Investec is highlighting. And base case, they expect strong FY26, moderation in FY27, and EPS growth will start resuming for the company in FY28. That's the highlight coming in from Investec on Lupin.
All right, Vinny, thanks a lot for that. Lupin up around 3%. Titan is the other one which has moved to the high point of trade, so just keep an eye out on that one as well. Gold and silver obviously on a high, and we move towards the festive season right after this small short period. But another report that we have to highlight today is Nimesh joining in with the standout brokerage report of the day on the pipe companies. Nimesh.
Hi, Mangalam. So, it looks like the street is warming up to the pipe companies. First, it was UBS, and now JP Morgan has initiated coverage on pipe companies with an overweight on both Astral as well as on Supreme. On Astral, they have a target price of 1,700, and on Supreme, they have a target price of 4,700. The big theme is they expect that demand is at an inflection point, and JP Morgan expects a demand recovery in second quarter itself and a margin recovery in second half of FY26. They in fact see the sector to grow 17-18% EPS growth over the next 3 years. The only risk to this space is the PVC price hike. That's according to the JP Morgan note. Remember, 2 days back, even UBS has put out a big report on pipe companies. They too had initiated on a couple of names, including Astral, with a buy rating and a target price of 1,800. And even UBS believes that they anticipate a demand recovery in the second half of FY26. So, looks like stars are getting aligned for the sector, and now with the hope of demand recovery and margin recovery, few initiating reports with JP Morgan today putting out a note on both Astral as well as on Supreme Industries.
Okay, all right. Thanks a lot, Nimesh, for that. Well, let's move on then. The new GST changes are all set to kick in just 10 days from now. The expectation widely is that a huge consumption drive is on the cards, and consumers, they are the biggest beneficiary. A colleague, Shivani, caught up with Mohit Malhotra, the CEO of Dabur India, to understand his views on the GST cuts and how will it impact the industry. Let's listen in.
No, I think it's fantastic because we never expected this kind of a reform will actually come into play. But I think government is actually surprised it. And the reforms have actually come at a time when the food inflation is very high for us. and the whole country is reeling with a lot of consumption going down. So the consumption is almost at a very big issues that we are facing, especially the urban consumption. So this GST reform will actually completely resurrect, I think, the consumption. The consumer confidence index will go up. Because the consumption will go up, the investment will go up. Because the investment will go up, I think there'll be more revenue and more money in the hands of the farmers also. And I think entire ecosystem will actually benefit out of this, right from the farmer, which is the farm, right to the folk, which is the consumer who's actually using it. Yeah.
Okay, so you spoke about consumption and how this is strategically, timed just ahead of the festive season. Is there a ballpark figure in terms of percentage that you see the consumption growing from here in this particular festive season?
One unique thing about this is that these GST reforms are actually coming, which is going to bolster the consumption in urban India. And urban India will actually benefit from the GST reform. So it is just not a focus on have-nots, it's a focus on haves also. So the middle class surge will actually happen. I can't exactly give you the number, I think it depends. But I think there will be a consumption impact definitely in the long term, which will actually happen.
Okay. You also, the last question, sir, you also spoke about, how there was a disparity between taxation of loose items and then when it was packaged and added value to. From a perspective of Dabur, how do you see that from a Dabur portfolio perspective? How is that going to benefit the company?
You see, a lot of classification issues have been actually resolved. One example I gave you earlier, what used to happen is the classical medicines used to be taxed at around 5%, which were all generic medicines, and the branded medicines, which are more high quality medicines in which we are adding value to it, the entire value chain is more improved and better quality, that was taxed higher. So it was almost a penalty. So why would a consumer go for a high price product when a low price product is available, so he used to compromise on quality. So I think consumer will benefit because he get a better quality product, albeit at a similar pricing. So we'll be able to reduce the prices of those products also and pass on those benefits to the consumer. So that entire anomaly between generics and branded has been resolved from my point of view. So if you look at paratha also, unbranded paratha and a branded paratha are now going to be taxed at the same rate. So it will reduce the gap between unorganized sector and the organized sector to a great extent.
All right, a gap reduction between unorganized and organized sector, and that would boost consumption. Also, at the same time, price packs coming in with higher grammage could boost volumes, and we'd see a net EPS impact of anywhere between 3 to 5% over the next 2 financial years, notwithstanding the near-term disruption of stock changes that we'd see on this GST. That's the word coming in from the management at Dabur and all the other consumer companies that we've spoken to earlier as well. Meanwhile, Nykaa, the consumption discretionary company, actually doing a lot better. That's moved to the high point of trade. And we're also seeing some traction on something like a Nippon Life India. That one comes up for you too. So that's at the high point too. We'll take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back. The markets continue to hold in the green. As we speak, the Nifty, in fact, has moved to the high point of the day. So we're nearing the 25,100 odd mark. I'll tell you what, the call writers, they were hoping that this level will hold out. But if that's not going to be the case, we can see a bigger short covering bounce as of now. As we've been highlighting, we've just seen, a fraction of that because the short contracts are down from around, 192,000 odd to around 182,000. And in terms of percentage, it's down from around 92.5% to around 89%. So that short covering bounce is still pretty much due. Let's see whether or not that does take place. We have more in store, at least for today.
One of those famous quotes about falling asleep or falling in love can apply to short covering as well. The quote is, how do you fall in sleep or how do you fall in love? Slowly and then suddenly. That's something that can take place in short covering
in a
as
romantic
well.
mood, Mangla?
No, not in a romantic mood, but you can also say I'm in a sleepy mood because it's a Friday. But either way...
No, let's not combine the two.
But, when we speak about one of the triggers that could be for short covering, that could also be the rate cuts that may happen from the US Fed next week. And a big trigger for that was seen last night, where the US consumer prices rose almost as much as expected in August, while jobless claims too accelerated, presenting mixed signals for the Federal Reserve ahead of its policy meeting. CNBC's Rick Santelli brings up the fine print of what can be expected sometime next week.
Let's look at initial jobless claims, shall we? Now, given their seasonalities when you have things like Labor Day, holidays, but ultimately, just on the surface, 263,000 on initial claims. That's the biggest number going back to the fall of 2021. And it doesn't end there. We also had, of course, our August read on the Consumer Price Index. And that inflationary group of data points was warmer than expected. However, let me rephrase. It was very close to expectations, but sequentially warmer, meaning 0.4 on the month over month. That's higher than last month, but as expected. Take out food and energy, the core, 0.3, a little hot based on history, higher than our last look, but as expected. If you looked at the year-over-year headline, 2.9, as expected, hotter than the rearview mirror by 0.2. The only number that wasn't hotter, that was equal expectations and equal sequentially to the rearview mirror, was year-over-year core at 3.1%. But that's a 3 handle. The Fed's objective is 2%. And I know that the PCE is closer to 2.5, 2.6, their favored inflation gauge. But it seems to me that we see a market in equities continually making new highs. We see an interest rate complex that looks like rates want to go lower, but the 10-year seems to be fighting to stay above 4%. Ultimately, I think we're trying to match the data with the market performance. And I believe that the interest rate complex may find more selling going into the weekend, because I thought many traders looking at the flattening yield curve were expecting the 4% level to be breached in a much more significant way than the 1 basis point we saw today after the 8:30 numbers. As for tomorrow, University of Michigan sentiment, and that will be the end of an important week. And this week in particular, not only the last week of important top-tier data. We've had the job report, PPI, CPI, PCE data, which means it's up to the Fed next week on Wednesday to decide. 25 basis points is built in. They'll give us 25. Many thought we could see 50 with the data points today, but if the market doesn't price it in and Fed guidance doesn't allude to the fact that it is or isn't priced in with respect to whether they believe it to be accurate this close to a meeting, no surprises. 25 basis point cut most likely on Wednesday.
All right, 25 basis points cut most likely on Wednesday. That's the word coming in. But the Nifty is up for 8 straight trading sessions. We got the mutual fund flow data yesterday as well. The market's at the high point of trade. And we are looking at prospects of some resolution between US and India when it comes to trade as well. All of this means that there is a lot of market talk which is expected. So you stay tuned to CNBC TV18, because right after this short break, on top of trading hour, we have Manish Chokhani of Enam Group joining in as the market master. You don't want to miss this conversation. Stay with us.